Good morning, guys. How are you all? Good. Yeah, I hope everyone came out unscathed from last week. So, I haven't had that many questions. I think most of them are from you, Alex. So it should be quite a short webinar. But if any questions crop up as I'm kind of jabbering away, feel free to just jump in, and I'll do my best to address them. We're also coming to kind of the tail end of the price action section of the mentorship. So use the opportunity to clear up anything which you're still kind of unsure about. Okay. So we'll just go through this trade plan first, and then towards the end of the webinar, I'll probably talk a little bit about Bitcoin. Okay. Okay. Gold trade idea. You've kind of planned out a trade plan from the daily down to the hourly. Yellow structure holding price down. Here's that daily structure. Okay, clearly a significant level and a good high time frame level around which to structure a trade. Down to the H4 FTR, high low moves away with momentum. Plans to take a trade from the low time frame FTR that broke market structure. Let me just get the annotation tool up. Okay, so on the H4, you've got this fresh untested liquidity, the area from which price broke out with good momentum. So good stuff here. That's exactly how I would be refining levels, zooming into the lower time frames to find those untested pockets of liquidity. And then on the H1, compression down into the level, orange circles where liquidity has been taken in the consolidation. Therefore, price should move with ease back through. Also, you've got a small inefficiency above the consolidation, which should be filled back to the upper yellow level, which is the target. So here's the compression. That's a test of that. That's a test of that. You do actually still have some fresh liquidity in here, but this consumed whatever was in here. Okay, that's all compressed. And then you're right, above here, this is an illiquid move, which should get filled in. Okay, so exactly what I want to see coming into a level, because that suggests to me that this broad kind of resistance area is washed out. There's unlikely to be much residual liquidity there, and so you've got exactly what you want: room for price to run here, and I like the target. Okay, untested pocket liquidity up here at the high. So I know we've been over this, Alex, but all in all, what I would consider a perfect trade plan, and I think under any other circumstance, would have got a nice reaction from this yellow level down here. But unfortunately, you took the trade under quite extraordinary circumstances, and those are just kind of becoming clear now. And price just blasted through your level. And again, this was exactly the scenario I was talking about in the webinar a couple of weeks ago on approach. The market was in full-on panic mode here, largely as a result of that drop in the equity markets, meaning heavy selling and large liquidity providers withdrawing liquidity from the market. A lot like we saw in Bitcoin last week. And of course, usually the S&P is inversely correlated with gold, but in extreme circumstances, and this is what likely happened here. Institutions with leverage positions in the S&P, or or other instruments would have dumped their positions in other markets, including gold, to cover those margin requirements. Anyway, what's important here is that, I mean, you don't really get any warning of this, but it's one of those situations where news or fundamental factors are compounded by inefficiencies in the market. So as well as all that selling, what you will have had here is liquidity being withdrawn from the market, resulting in otherwise solid levels fading. Does that make sense? And so I guess the takeaway is that it's important, if you're trading these markets, that you're really aware of the kind of conditions you're trading in, and an awareness of those conditions requires a familiarity with the market. Okay, because the books at the moment on the S&P, for example, are so thin that if you're trading the S&P or any correlated markets, you're probably taking on a lot more risk than you might think. Okay. Yeah, like the Bitcoin books, they're extremely thin at the moment. They're extremely thin. And so, conditions like this do present opportunity, but if you're trading Bitcoin at the moment, you're likely taking on a lot more risk than you might think, even if you've calculated your risk to reward and you've got a stop in place. Because liquidity is so thin, at any moment you could get slipped for your whole account. So I'd really suggest just sitting out at the moment. Because when the books are thin, you just can't calculate risk. Okay, but I'll talk a little bit more about Bitcoin towards the end of the webinar. Right. So here's another trade idea. Blue was holding price down. Yellow was the FTR that broke blue. Red, potentially first trouble area. You're expecting more liquidity there. And you've got a plan for when to close the trade, spike into the red, and then close below the local swing high, otherwise targeting the origin of the move down. Okay, what have we got here? Okay, here's the high before the low. Okay, this in here was the pocket of liquidity off which it kind of responded, but as you can see, it's engulfed it. And so that pocket of liquidity is more than likely spent, and indeed price does break through, and as it does so, it leaves behind fresh or untested pocket of liquidity here in yellow. So it's a nice trade idea. Price has broken market structure here, and it's pulled back into this fresh or untested pocket of liquidity. And of course, we don't know how much liquidity is in here. We don't know how much buying we're going to get here, but it's quite likely that you're going to get a manageable reaction, okay, which is what you get here. So a response off the level, which is going to give you time to manage the trade. So price moves away from the level and gives you an opportunity to take risk off the trade. Let's see. So this is what happened. The target did hit here. And you took the trade off this level, but not before price pulled back even deeper to the next liquidity base down in here. So I guess there are a couple of takeaways from this. The first for me is that you you always take note of potential trouble areas, however small, because those are what are going to stand in the way of you and your target, and will play a big part in how you manage the trade. And in this case, there was a small pocket of liquidity in here, which was enough to push price down to the next area of fresh buy side liquidity. So these are the areas, the kind of areas you want to take note of before you enter a trade, because that as I say, they'll play a part in how you manage the trade. And of course, you never really know how far this move here. You never know how far this is going to retrace. But ideally, what you want is for all of this residual liquidity to have been consumed. To have already been taken out before you enter. Okay. So now that that's been taken out here, okay, and this whole area is kind of compressed. This is a much more attractive long than this one here, okay, because all of the residual liquidity in this area has been kind of consumed. That's compressed. Does that make sense? So a trade at that lower base looks a lot more attractive. The other point, and I've already been over with you, Alex, but I'll just go over it again for the benefit of the group, is that when there are multiple points at which price could turn, like we've got here, you've got a couple, there's one down here as well, 2 or 3 fresh pockets of liquidity. So when there are multiple points at which price could turn, I tend to wait for the lower levels, the extremes, the point at which your risk to reward is greatest, and at which sellers are more likely to be getting weak. Okay, so the lower this goes, the more likely it is that sellers are weak and buyers are strong. So unless price is trending strongly, I'll usually wait for those extremes as a kind of a rule, for the reasons I just mentioned, but also because it somewhat removes the guesswork. Okay, what I'm always trying to avoid as a trader is guessing where price will turn and getting chopped up in the middle of a range like this one, mainly because it's just mentally exhausting. It will deplete your mental energy. So what I'm always looking for is to find the point at which I think price kind of must turn to remain bullish, the extreme basically, and trade that, because you generally know very quickly whether you're right on the trade. But as I say, you need to find what works for you. That's how I like to approach it, because personally I'm extremely kind of uncomfortable with ambiguity, and I hate sitting in drawdown. But the most important thing is that you develop your own trading style based on your own personal psychology, and that how that kind of interacts with the market. And everyone's going to be different in that respect. Does that make sense? Okay. Another trade plan from you, Alex. This time for CAD JPY, and I'll just read it out and then we can take a look at the chart. So we reacted on the second test to the lower FTR with an illiquid move up to the FTR that broke market structure on the way down. We should fill in the illiquid move, okay, but I'm wondering if we react at the low time frame FTR at blue. I think the lower level has been tested multiple times, and therefore I'm not expecting it to bounce price like last time. And a plan for management here as well. So here's the chart, and I don't really have much to say about this one, except that I really like both the analysis and your approach to managing the trade here. You've identified the key levels, this illiquid move as well, which should and did get filled in, and the potential trouble areas for your trade. So this untested base here, cluster down at the base of that illiquid move, and the lower portion of this base here, which is supporting price. which you're right in thinking does look weak. Okay, so another nice trade plan. So it did bounce from blue, cut it for 1.27R as shown. And so you were able to get out in profit as a result of your pre-planning. I also like the stop placement here, by the way. You know, you're giving price some room to retrace because you know this is untested, and so you should expect a reaction here. But you know, I would expect resistance there, so it's a nice place to kind of tuck your stop behind, taking risk off the table, and also locking in some profit. So yeah, excellent trade management here. And this one on the S&P. So I'll just read through the thought process first. Okay, you've identified a flag limit which is holding price up and was consumed. An FTR which was formed when that level got broken. And you're taking a trade on the retest of the level which broke through that flag limit with a take profit at an FTR near the bottom of the chart. And the approach is to your liking. So before I go into the questions, I'll just have a look at the chart. So that's the flag limit which was holding this structure up. It breaks, and you get a kind of immediate retest here, which only manifests as a wick on this time frame. And that immediate retest is often a trade I'll take if you've got a particularly illiquid leg below price. So in this case, you know, you've got some fresh liquidity there, so I probably wouldn't have taken that. I would want to see this whole area get kind of washed out first. But let's say this illiquid leg was a lot longer. Okay, it had room for price to run. That immediate retest, that wick up to this untested liquidity after it's broken down through this flag limit, is often a trade I would take with a stop above that liquidity. But in this case, you're correct to wait, I think, for this you know, high time frame kind of rounded retest here. And you're right that, you know, price is now when it comes back up and tests this here, it's cleared out this liquidity. Okay, it's gone all the way to the extreme, and it spends some time kind of fucking around down here. So that suggests to me that all of the liquidity in this general support area has been washed out. So you've got room for price to run. Down to, I guess, well, the next area of fresh liquidity, which you can't really see on this chart. Yeah, it's also worth noting that the approach is ideal here. It's an illiquid move, which is not impulsive because the way in which price moved out of this area was also illiquid. Okay, so this illiquid move is expected. It's not impulsive because you know, the way in which price moved out here was also illiquid, and so we can expect price to move through that with relative ease. Okay, so the approach is ideal. You know, not necessarily indicative of significant buying, even though it might have looked quite strong at the time. And yeah, it's really great that you're starting to internalize that kind of truth, I guess, because a lot of people take a long time to get to grips with that. And I know it's scary when price looks quote unquote bullish, but yeah, I hope you're all starting to get used to the fact that, as I explained, when price looks most bullish, it's often at its most bearish as a result of the fact that it's illiquid. Okay, now let's just go over these questions. Was considering closing the bottom of the chart as a target, as below where I took profit, there is an illiquid move that would get filled in. Where would you choose to take profit and why? Okay, and this trade feels textbook, but it could just be luck. Would you have played it any different? So this is an hourly chart. This is where you entered, and I think you took profit. I'm guessing down in here. Okay. So on the hourly, I think this was a perfectly reasonable spot to take profit. As you can see, there was some residual liquidity there, which caused price to stall for a few hours. But given the high time frame structure here, and I think I mentioned this at the time, that you could have been looking lower. Not that I would have played it any differently here, given the uncertainty at the time. But price has broken market structure in quite a dramatic fashion, and is currently kind of trapped or contained by these flag limits. So on this time frame, price is trapped between that flag limit and wherever price found support here. Okay, so this base, which has been entirely consumed. So really, if you're expecting continuation on the higher time frames, which you should, given the high time frame break in market structure, it is up in here somewhere that you'd be looking for shorts. Looking for continuation on the higher time frames. Okay, so entering like you did by zooming in on the lower time frames, but not managing the trade on the lower time frames because you've got price action here on the higher time frames. I know this hasn't been engulfed, but there's a reasonable chance that that's going to get broken. And I think I mentioned the next target as being somewhere in down here, and that got quickly engulfed as well. So yeah, if you think back to the webinar on scale, this is what we want to be zooming in at significant high time frame levels to enter, and then trying to run that trade on the higher time frames. So not closing at the first kind of support on the time frame on which you entered. However, that being said, I think under normal trading conditions, this would likely have ranged here sometime before breaking down again. It just so happens that liquidity is currently extremely thin, but with experience, you'll come to recognize that on the chart and act accordingly. Okay. Okay, so here I've just got a recording of a trade I took on Euro GBP during, I think it was the last mentorship or maybe the one before, which I just thought I'd include. So you kind of get to see what a trade looks like from start to finish for me. So okay. So this is a daily chart, I think, just so you can see the higher time frame context here. You can see price has broken these long-term highs. It's formed an FTR here. Okay, pushed up, and then broken back down through this FTR. So I'm now anticipating that price will find resistance somewhere up in this daily liquidity base. So, you've also got kind of a SR here, but really the SR isn't important. It's simply a product of the liquidity dynamics here. So as price was up in here, about to push through those highs, what you will have got is buy side liquidity, bids kind of backing up here. And when price broke through there, came back, that's where it found support until those got washed out and price broke back down through that level. Okay. So anyway, the point is I'm expecting resistance somewhere up in this daily level. So this is that daily level here. Okay, this whole range of consolidation. And within that, you can see I've just marked out a portion of the area from which price left with good momentum. And note, price appears to be kind of trending up here on the lower time frame. So higher highs, higher lows. But in this case, I'm not afraid to fade this level here because the higher time frame market structure is bearish. And in this case, price is simply drawing back into this thin or illiquid move. Okay, you've also got this nice thin move up into the level. So you can see that the run up into the level is perfect. There's no basing before this low time frame high, and it looks quite thin. So I expect this to get filled quite easily. And although I expected this to move lower because I'm taking it off a daily structure, this box down here was my first target. And at the time, it looked like a relatively good spot to take profit as you can see the top portion's been kind of tested, but the bulk of it remains fresh. So when price runs up into the level, I just sell it at market, and my stop goes above the liquidity base, and my target's this fresh liquidity at the lows here. So yeah, the run up's good enough for me. I sell it at market. Stop goes above that base there. I think that's it for now. So I'll move on to the next part of the trade. Okay. Here I think just demonstrating how quickly I'll move my stop down to take risk off. And I'll talk a bit more about this in the webinar on false breaks, but price is back below this high, and as you can see, it's excuse me, it's engulfed the nearest low time frame buy side liquidity. So I don't expect it to be coming back up here. So I think I held this one overnight, which is fairly unusual for me, but I'd already taken risk off the table, so I was quite comfortable holding onto this one, and you can see that it kind of fucked about for a while, which is typical of the Asia session before finally breaking down. And here I've just moved my stop down above some low time frame structure. You can see low, high, continues to break down. This is the FTI I want to hold for price to continue to remain bearish. So I've just moved my stop above that to lock in the majority of my profit, because the lower this gets, the higher the chances of it reversing on me. Anyway, I won't let this play out because it's a little dull, but price eventually hits target for about, must have been about 6R. Anyway, I just thought I'd show you that because it might be of interest to you. But that's all I've got for this week. Apologies, Vam, I got your email with your questions just a few minutes before the webinar. So I'll try and cover those next time I do a Q&A. Does anyone have any questions? If not, on Friday, so this Friday at 10 a.m, I'm going to cover volume profiling and how I use it. And it's just another way of visualizing price and volume data, which I think can be really helpful. And for some of you, I think it will click. But even if you don't want to incorporate volume profile into your trading decisions, I think that webinar will still be useful in reinforcing or giving a different perspective on some of the concepts I've already covered. Okay. So on Friday, we'll cover volume profile, and we'll talk a bit about market profile as well, which is kind of similar. And the week after that, we're moving on to the third month, in which I'll cover false breaks in the first week, which is a massive part of my edge. The footprint chart, or how I use it and how you can use it. And we'll also cover trade management and psychology. And psychology is one which is quite kind of close to my heart. So what I'll do is send out a link later on today with which you can pay for the next month, but there's no rush, as long as it's kind of complete by next Monday. But I'll probably send out a reminder out about that next week anyway. Okay, is everyone good? Any questions, or shall we finish up? Yeah, Alex. Yeah, we're meeting at 1. Sure, I can talk about Bitcoin. Yeah, really nasty. I mean, in terms of market structure, a move down here was not unexpected. I mean, if we mark this out, high, low, high, low. Sorry, lower low, lower highs, lower low, lower high, lower low. I'm not sure why people were expecting this to move up here. It's retraced into the extreme of this FTR. Okay, this is the FTR. There's your low. Price broke down, it retraced, it continued to break down. Price was pulled back to the extreme of that FTR, and on the we go to the 8 hour, on the lower time frames, you've got, textbook market structure stuff. There's the low before the high, price breaks down, pulls back, carries on breaking down. So this is your first FTR. Sell the pullback into here. Anyway, it doesn't quite explain this move, which is a product of what's happening in global markets. The bids just totally evaporated here. It's one of those times when fundamental factors, people were wary of risk here, and so they withdrew their bids from the market. And so fundamental factors, which I mean uncertainty about the economy, was compounded by this kind of market microstructure effect. What you would have had is massive stop outs once price started trading back into this range, and especially below these lows. And those market sells, the effect of those were kind of compounded by just an absence of bids here. Market makers withdrawing liquidity from the market, many of whom will have actually got kind of blown out here. So total absence of liquidity. On top of that, you've got over leveraged traders on MEX, and so what you had here was hundreds of thousands in liquidations which had to be cleared. So they're just piling up on top of price, preventing it from bouncing. And it's still kind of unclear what happened here, but MEX went down, and price bounced however many percent. It was insane, yeah. It was a crazy move. Yeah. But there's not much to say. It's a sad time for Bitcoin. I'm expecting it to spend some time ranging here. But the takeaway is, for me, everyone trades differently, but if you're not trading massive size, what I'd always do is keep your liquidation price just past your stop price, so that if a move like this, if you're caught on the wrong side of a move like this, you're not going to get stopped miles away from where you intended to get stopped. Okay. So let's say you entered long here with your stop here somewhere. In conditions like this, you're liable to get stopped way down here or even down here, which is disastrous. So what I always do is keep my use enough leverage so that my liquidation price is kind of just beyond my stop, so that in the event of a kind of black swan event, you're going to get liquidated before you get stopped out at market all the way down here. So just a really worthwhile protective measure. Okay. Yeah, there was a point where 10 million would have taken it to zero. I think it was a little more than 10 million looking at the books, but it did. Bitcoin almost went to zero and everyone in a leveraged position would have been taken out. Oh, crazy stuff. Yeah, I guess just a good reminder of the risk you take when you trade, and to always prioritize that when you're thinking about trade management, and things like where you keep your stop loss, how tight you keep it, how you use leverage. Because these markets really are quite illiquid. And as a result of the nature of a market like MEX, these moves are going to happen more often than you think. This was particularly insane, but crazy moves like this aren't irregular. So it's really worth spending some time, planning out how you use stop losses and how you use leverage and what measures you take to protect your account. Okay. But I hope everyone came out unscathed. Up in Bitcoin, down in USD value. Yeah. Okay, guys. Well, that's all for today. So I didn't send out a link for people who wanted to meet up today, but if you do, just send me an email and we can sort that out. Otherwise, I'll send one out for Friday. And as I mentioned, the next webinar will be on volume profiling, and that'll be on Friday at 10 a.m. Okay. All right. Hope you have a good week. I'll speak to you later.